Hey everybody, Kimosabi here, giving you an update on the Crazy Eights. So we've got the 108 that just got tagged. That is, part of the Crazy Eights. And where's price going from here? Is this bullish? Is it bearish? Depends on how you look at it. You do currently have a daily candle lower low than the previous low. So you may end up getting a lower high somewhere in the 120 area at previous resistance and come down, and then we might be going to 88. That would fit with like an Elliott wave pattern that I suggested back here when this was moving up sometime in May. I was talking how this could be ABC up. So that's three waves down, three waves back up to the golden pocket area, or the retracement for an expanded flat B wave, which could end up being a running flat, which actually would make sense if this does come down here. So if you are bullish from this area, this is the way Wyckoff accumulation does work. How you would have a reaccumulation, the shakeout, then your show of strength goes above the range and holds above the range. However, it has to hold there. I am concerned that this does bounce up and then breaks back into the range. If that does happen, you're seeking out the liquidities down probably at the previous supports down at 90 or 88. So that might be the crazy downside target of 88. But if price holds here and breaks above that high, then price is going to accelerate to the upside quite substantially, I would think. So just for illustrative purposes, I do have this in linear scale, and I will postulate that we could potentially be doing there's three ways down, and this is your B leg up, and you may be coming down for C. If that does happen, then you would take a Fibonacci extension measure. Let's measure all the way down there. That's the time. Let's measure with a Fibonacci extension tool down to there and project from our current all-time high. The 1-to-1 comes right down to the 90, so anywhere in this pocket would work at previous supports. That's if you come back in and find acceptance back into this range. Likely going to have a bounce though first, I would think. So this scenario would be if price comes up, bounces, and then breaks this low. I think Camel Finance is talking about a daily cycle low happening here with confluence with what's going on there. If that breaks up, closes up, makes a higher high than last week's high, and then holds previous supports and pushes up, then you're good. But if you break below this low after it bounces, if you break below this low, your target is most likely going to be previous supports at around 90K or maybe 88K. Let's zoom into the 4-hour and look at what we want to see. Oh, but before we do, here on the daily, you can see back in December and January, those two peaks of your previous high, you're currently back testing them. So that is the potential for Wyckoff having a spring, show of strength, and holding above the range. That's kind of exactly where you want to see it. I was optimistic that this would have been back testing the 112 area and push up off of it. Didn't happen, and price did not remain in the bullish zone of this range. But let's zoom into the 4-hour and take a look at that. All right, here on the 4-hour, we have our local range here, which price did break down from it. It broke up, then it broke down. This was the previous range. So if you get acceptance back into this range, that's where your bounce attempt is going to happen. You're likely going to target this liquidity at 120, but you have to find support here at the previous supports at 111. So wait for a bounce, comes and back tests right at the 111.6 area, previous supports. There's your long entry. Stop loss goes at the low, and see if you get a push up into that liquidity. That would be your first take profit. If price holds above the median of this range, which let's get a target of that right there in the middle of the range, it would have to hold above this 117,324. So as you can see, the price came down to the bottom of the range, resisted the midline of the range, and then pushed down off of it. And now it's broken the low. If this is another reaccumulation, this would be considered your spring. Your show of strength would go all the way back to all-time high and hold above this range, and then continue markup phase. If this was a distribution, you may not make it above the midline. You may go up and grab liquidity, but no like daily closures above there. It might wick up there and come right back down. That would be indicative of distribution if you do grab that liquidity and reject hard from it. But you had a bounce attempt here, failure of the bounce attempt, and your next liquidities are lower. And these liquidities are your targets. 107 and 104 roughly, somewhere down there, maybe at these previous supports at 102. That may be your targets. The invalidation of that target is breaking back above these supports. If you remain below here, that's a distribution. This is your last point of supply, and you're going to start markdown phase. So if you do want to go long on this, let it actually bounce. Get a higher high close. Maybe it comes back up to 114 and then holds 111, 112 area. It might actually just hold this wick at 110, 500 and then bounce back up. But your invalidation would be this low at, what is that, 108, 108.8 after a bounce, if it does indeed bounce here. If it just continues pushing down, let it continue down until it's done, and then let it bounce. Then try to grab a retrace at previous supports and see if you get a push up at least into this liquidity up here. But if this is a distribution, you might not make it up to this liquidity. You may just push up like halfway into there and not make it above the midline of this, and this would be your last point of supply and go down. So you might have extreme weakness here. But if you do have a daily cycle low happening, or a mid-cycle low, you may get that bounce into this liquidity, and then we'll see where it goes from there. If price does grab that liquidity and comes back below the middle of the range and comes dancing around here, that's showing weakness, and then you're likely to push down for some kind of ABC down or something like that. Speaking of ABC down, you could count this an Elliott wave for some kind of ABC down. That is your expanded flat. I don't know if it came to any targets or if it makes sense given the wave structure, but let's measure it just to see. Got a range there, break the high. Your expanded flat, yeah, 105, 104 would be an expanded flat target. It could be done here, but if you do push down there, maybe a wick down there real quick, but no closures, no daily closures back below 108. Because, like I said, if you close daily candles below 108, you're getting acceptance into this previous range, and you're likely to test a lower liquidity. So can't do a video without drawing on the screen a little bit. So price action that I would anticipate coming from here is this price action kind of completing here somehow. If it's not complete already, it may be complete. I still see the ability for it to go down further as long as you're making lower lows and lower highs locally here, like on a 4-hour. But your clue to it bouncing up higher is getting back inside this range. If you do get back inside the range, you'll hold that as support, and then you'll push up off of there. That's where price action, that's where you got to do your work, I guess. You can take profits. This is a profit-taking area just because of liquidity. And after that, if you're able to hold the midline here, that doesn't look bad. As soon as you break down below and back test as resistance again, then look for more downside. But if this is a reaccumulation and you get price action that holds above here, price action should move to the upside, targets being 144 and potentially 166K, if that is indeed what we're doing. But again, it has to show that first. You don't have any uptrend happening just yet. You do have a swing high here, so if you break above there, you'll have a higher high. Your higher low may come here at this area, like the midline of the bottom section. That's a potential, but you may have to work it. But I'd prefer to see this price action just kind of melt up from here if it wants to be bullish, and grab this liquidity and then hold here, push up to the top of the range, pull back, maybe find support again, and then push up and go. Maybe it has to just break above all-time high and hold up above here as a show of strength, kind of similar to what it's doing on the daily, where this is back testing previous resistance now as potential support. We'll see if it holds. If it does hold, the clue to it holding is making a higher high or getting back inside the consolidation, finding that as support, and then pushing off. That's your clue to say support is holding. Starting an uptrend from here, higher highs, higher lows, higher highs, that's the clue that support is holding. But until then, you still have a downtrend. This price action came down and this actually closed higher than there. So I was hoping the midline would hold. It did not. Broke below it, back tested as resistance, and sold off. So consolidations like this, you have the bullish section of your range and you have the bearish section of your range. Anytime you're in the lower portion, price, the way that I look at it, is considered more bearish. And when price is in the upper range, it's considered more bullish to me. So this coming back down here, testing the support of the midline was fine until it broke below. Then it was like, ugh, not looking great. I did try a little scalp long there, got stopped out. And did I touch it? No, I let that close. And I was going to trade that long. From here, closing a higher high, I looked for a higher low to be there, which price just melted through it. So no long entry there until price came down to 110,500. And I thought, yeah, we took liquidity. You should have a bounce. That bounce failed and got stopped out. So now waiting for reclaim of the range and this liquidity, and then hold it above there for now. So that's kind of the way I'm looking at price action for now. Again, above the median of this range, bullish. Below it, not so much. So I hope that helps, and we'll continue to update and see if these crazy eights go up or down. Until then, keep them stops tight and have a good night.